All right, first of all, Ira Glass on a good day. All right, so this very entertaining freakout, here is what he's actually saying. He's saying that the Federal Reserve should come in and lend money to Bear Stearns. Basically, the Federal Reserve should fill in for all those lenders who are leaving Bear Stearns. The Federal Reserve should step in and do what everyone else in the market is rightfully worried about doing. Lend money to an institution that, through its own risky behavior, got itself into trouble.
Right, and strangely, this persuasive argument worked. Investors started pulling their money from all sorts of financial institutions, and around that time, another firm, Lehman Brothers, went up in flames. We have some flames.
Yes.
And panic ensues, and the Fed was doing just what Cramer wanted. Every type of lender out there, everyone who lends money to banks and other financial firms basically fled, and the Fed had to step in and replace them all.
Now, how's that for some high-tech graphics? We had a long debate about the eagle and what the Fed should look like. So now you might be asking yourself, well, I didn't flee. I kept my savings account. I didn't remove my savings from your bank, Hannah.
Right. And you don't count, Alex, basically. You're insured by the FDIC. Everything up to $250,000 is insured by the government. But there are lots of people and institutions who had a lot more money than your $90, sorry to tell you, and they lent it out to banks, and all of a sudden, they wanted it back.
Now, just a note on the jargon, because you've probably heard a lot of people telling this story, but you might not have understood it. They might not have been telling it the way we're telling it. I certainly didn't understand it before I started getting obsessed with all this stuff, because the people who talk about this, they don't use normal words when they say it. Here's what the professionals and the academics and people on Wall Street and bankers, they say. They say, we couldn't get access to term funding. Translation, no one would lend us money. We couldn't access the credit markets. Translation, no one would lend us money. We couldn't roll over our commercial paper. Translation, no one would lend us money. And the mother of all euphemisms, our liquidity dried up. Translation, no one would lend us money. So all these huge financial institutions, they did the same thing. They all went to the government. So this graph, this is all the money that the Federal Reserve is now lending to prop up the nation's financial institutions. This is Lehman. This is where they started pumping money into the system. And you can see goes up to September of 2009. They haven't really stopped. And you see in sheer amount, it dwarfs the $750 billion bailout package that Congress passed. It's over $2 trillion that the Fed is spending to balance the balance sheets of the nation's financial system, to plug the hole they put there themselves with these complicated financial products. So, what do we make of all this? There's a pretty strong argument that what you're seeing, is exactly what the Fed should be doing. The alternative to just letting banks fail, that is catastrophe. That is worse than the Great Depression. That is, in some scenarios, going to the ATM machine and not being able to get your money out. It's chaos. It's a bad situation.
Right, and instead, we are in this situation. This is data from September 2009, and so the Fed is still propping up our economy. And if you got a credit card or a student loan, that blue line there, that's you. That's liquidity to key credit markets. That's helping you out. It's nearly $50 billion.
And if you bought a house recently or refinanced your house, this right here, these brown peaks, that is the Fed basically lending you the money to do that. That's almost $1 trillion that the Fed is spending to buy up mortgage-backed securities, to ensure that there's a mortgage-backed security market, to ensure that there's lending out there. Basically, there would be no money available to buy a house or refinance a mortgage without that. And then, let's see, right here, this goldish army green color down here, that is the Fed buying long-term treasury bonds, something it has almost never done, and it is doing that specifically to keep mortgage rates low, to help banks get themselves out of this trouble.
Right, and what this is telling us here, this thing here, the story behind this is that, of course, the more that you prop banks up, the more that they know that they're going to be propped up. So You all heard the way that Jim Cramer was demanding that the Fed, step in and come and bail out the private firms because of their mistakes, and mistakes made, by the way, which netted billions of dollars in bonuses to exactly the people who made them.
Right, and let's just talk about the bonuses for 1 second, because this is something that I have talked about with people on, it's a very easy populist issue, and I'm not coming down on one side or another, but people who, on Wall Street, this guy Mike, that Wall Street banker, this is something that he thought about a lot. Those big bonuses, that was a big part of the problem. And it was a big part of the problem because, well, listen, it gets deep into the heart of human nature.
This notion of pay, it's basically what you're saying is that people were paid too much.
Yes.
And do you feel that about yourself? And did you know that at the time? Were you thinking that?
Tricky little bastard. Listen to me. No. Well, actually, I don't. I definitely at the time I will absolutely say that I did not think I was being paid too much. In fact, it seemed to be very much in line. Wall Street is probably the only business on earth where I ran a desk where you can pay somebody $1 million and he can call you a son of a bitch for it. And I think that that's distorting in a deep cultural, sociological way that American society has not even begun to deal with. Working on Wall Street gives you an incredible sense of entitlement about how much you're worth as a person and how much you should be earning for the things you're doing.
Is there anybody, or was there a part of you that was ever wondered, like, is this stuff that I'm doing, or is this stuff that is happening in my industry, is it possible that it's going to have consequences, or was that even just totally opaque to you?
Totally opaque. I mean, totally opaque. It seemed at the time to be the normal functioning of the economic system, that there should be, freely flowing credit, and it should be large amounts of it, and it should just slosh around, and
somebody has to slosh it.
Somebody has to slosh it, and I don't know. I think that that was the big issue when it came down to roost. It's like a lot of people were pushing around huge amounts of money and not paying enough attention about the impact of it, either the risks that were being created or just the myopia that dealing with such large sums ended up doing to giving people.
So Mike worries that because Congress won't make the tough decisions that really need to, that Congress won't make the tough decisions that they really need to make. Measures that Mike himself thinks should be taken, but he knows that at the time he would have fought. And the Obama administration is right now in the middle of talking about these tough decisions. They've put out their proposal for how to change our system of regulation, trying to make big banks behave more safely, trying to coordinate between us and the rest of the world, trying to make them keep larger cushions for tough times, get rid of some of the layers of regulation, and to try to change the incentives for people on Wall Street, try to align them more with the incentives that everybody else has. But until that point, until this legislation is passed, what the government is actually saying and what it is actually doing are sort of the opposite. In order to keep our economy afloat, it is propping up the banks, making it as easy as possible for them to make money, and warning them that soon it's all going to change. So thank you very much for coming, and I think we have time for questions, and I think we're going to have some helpers out there. So we'd be very, very more than happy to answer any questions that you have.